Well, still analysing what the street is expecting from the budget this time around. So let's get in a poll, and our researchers are waiting by to tell us exactly what the street opinion is. Darshan as well as Ajay. But Ajay, you go first. What are the prima facie numbers and what's the market mood like ahead of the big event?
We at 18 Hour Research have conducted a very exhaustive poll among market participants regarding how market would be approaching this budget. The first question we asked them, is there a possibility that Nifty could trade above the 7,200 mark post-budget? From the around 70-50 market is trading right now. Majority of the guys polls believe that it's unlikely that market could scale up that particular level. There's a big fear in the market, which is about long-term capital gains tax duration being hiked to 3 years. So that is the second question we posed to them. And though there is a lot of caution and fear, 72% of the people polled for this particular question believe that government will actually skip this part and will actually not go ahead and make any changes. The third question we asked them, that if indeed for some reason the government actually goes across and does make changes to long-term capital gains, what is the likelihood of damage? They believe that almost a 500-point fall as far as the Nifty goes is possible in a day or two after this particular tax is actually changed. The fourth question we asked them was that there's a big kind of a conundrum whether they should go for fiscal prudence or for growth. When we asked them, will the government relax the target as far as fiscal deficit go in order to boost growth, 37% say yes, 41% say no. So there's a kind of a tug of war on this particular question, and if indeed the government does relax the fiscal deficit target, we asked them how could the 10-year bond yield spike. Most of them believe that it's likely that this would spike very sharply above the 8% mark.
Yeah, thanks. Darshan, what about the macro numbers and estimates that the street is working with?
See, one important question that we asked them was the fact that will this time around the net borrowing figure be more than 4.5 lakh crore. 64% of them did believe it was there, it was possible. They believe that the net borrowing will be over 4.5 lakh crore. Another important question was that will this time around the finance minister take the entire pay panel burden in this fiscal itself, or will it be staggered? 64% of them did believe that this time around, as seen in the railway budget, the entire money will be taken at one shot. Majority of them do believe this is possible. Divestment target of over 35,000 crores. 60% of them did believe that it will be possible. The government needs money, and divestment is one of the way they believe that the fiscal deficit can be reduced. PSU Bank recapitalization over 25,000 crores. 100% said yes, given the fact that the government has said 70,000 crores will be infused by the government over the next few budget. But given the fact that the balance can't be raised in the market because it's at such a bad situation, most of them do believe that the number will be at a much higher scale. And finally, will the government be able to boost rural demand this time around? 56% did say yes. They believe that schemes will come in. It will be a populist budget. 2 years of drought have come in, so the government will be extremely careful this time around not to disappoint anything on the rural side, and they will be able to come out with a budget which will be able to boost consumption on the rural end.
Okay. Darshan, thanks a lot for that. Hiren, let's talk numbers. What is important is that what are markets pricing in? At 7,000, from a budget standpoint, to your mind, what exactly are markets pricing in?
Very low expectations, I think, given the backdrop. And I think it's more than, the budget expectations. It was because of the way the global markets and the emerging markets behaved in Jan and Feb, right? And that kind of seeped into the, and all this debate about capital gains coming in and so on and so forth. So my sense is that budget expectations, in my long career, it's probably one of the years where budget expectations are very, very low, and there's a lot of fear in the price.
Will the fear, Chandresh, take us above 7,200, or would it restrict us way sub 7,000?
I think I completely agree with you. I think there's one budget where market is extremely, there's no real expectations, and there's a lot of fear. So if you get a decent budget or half decent budget, which means fisc is reasonably anchored, and some steps to improve long-term investment demand in the economy, I think we should see reasonable buoyancy in the market. But coming back to it, it is just one event. I think eventually, this calendar 2016, the markets are going to be more impacted by what's happening globally. And I think after 7 days or 10 days of the budget, I think those events will become more center stage than rather the budget.
But what if a long-term capital gains tax comes? Are we going to see new lows?
The low, we are really at the low anyway, more or less there.
I said
So
new
it's-
lows,
new
not the
lows
previous
are not too far
low.
away. It's very difficult to call 2-3% kind of
But it would
moves in the market.
cause a lot of
But yes,
volatility, right?
I would think whether the market takes it immediately as a big negative, I think from a long-term basis, it certainly is a negative in my view. Yes.
Bala, we always tend to focus on equity markets. Let's also understand the positioning of the bond market. Yields are now nearing 8%. Markets are nervous about government's commitment towards fiscal deficit. So if government decides to stick to their fiscal deficit commitment, do you think the party in the bond market will start, and that in a sense will force Reserve Bank of India to cut rates, and that could be the next trigger?
Yeah, I think again, if you look at the bond market, as he said that the equity market does not have any expectations. The bond market is now again full of fear. Whether 3.5 as higher level,
Everywhere there is
what is
fear.
the treatment that will come for the Uday bond? Whether there is going to be a very clear HTM kind of bond treatment you are going to give, and how you are going to manage the liquidity. I think the bond market has gone completely the other way around. I think globally the yields have, the expectations have come down in terms of yields going up, and there are economies where it's going to the negative territory on yield curve. And India is one economy where the expectation of rate cut continues to remain very, very strong at all point of time. Despite 120 basis points rate cut, the bond yields have gone up. So is it only because of fiscal? I think the answer is no. I think it's a combination of, one of course the fiscal is only one factor. There are many factors which are influencing the bond market today, which is probably in the hands of monetary policy or maybe Reserve Bank of India. And therefore, if Reserve Bank of India governor has been saying for quite some time that we need to establish credibility in the global investors in this mind space, that India is sticking to the credible policy on fiscal. If he wants to endorse that, maybe there is a high probability that if 3.5% with the credibility numbers at the end of the day, also need to be looked at the math. If the math is also reasonably convinced, probably the Reserve Bank of India would endorse the budget with some kind of rate cut. Though the rate cut could come, whether it is going to lead to a significant rally in the bond market will still remain to be seen, given the fact that we need to still give a lot of clarity on the other variables, which I think the market is watching it.
What are we likely to hear on PSU Bank recapitalization? Because again, that is going to be a number which is going to be extremely critical from a market's perspective.
I think everybody knows that that number has to be much higher than what was envisaged in Indradhanush, I think, which was announced last year. And obviously, the survey has now talked about trying to use Reserve Bank's excess capital for capitalization. We think the amount required is actually going to be fairly large. I think if you really wanted to do a very good job, the number has to be closer to the 1 lakh crore mark. If you really want to do it upfront and do a really good job at it. There is another issue linked to that, which is about governance. I think you don't want to just capitalize the banks and then not be able to make the changes which you want. I mean, I always say, no, crisis is an opportunity, and that would be an opportunity wasted if you just capitalize them and then don't drive the changes which are required in terms of governance. So yes, it should be a reasonably large number. Anything between 75,000 crores to 1 lakh crores will provide some confidence. Obviously, also lead to some confidence that the banks are in a position to fund some growth subsequently. Whether the governance stuff, I think that's more important from a longer term perspective. That really happens, I think that remains to be seen.
Is a big commitment to capitalization more bad news than good news, Hiren? Because if I'm equity shareholder, for me, my stake will get diluted. Most of the PSU banks currently are trading sub their book, and bank recapitalization or government recapitalization will only happen sub book. So if I'm a minority shareholder, I'm getting shafted.
Beggars can't be choosers. I think. I think what we are in a circumstance. We are not in normal circumstances. In a normal circumstances, you would say, that you should do dilution at a higher valuation because that's more minority shareholder friendly. Today, you have to come out of a catch-22 situation. You are in a negative feedback loop in the bank because there are NPAs. There's not enough capital. You can't lend. You can't have growth. You want growth. You have to break the cycle somewhere. And the only way to break the cycle, tough as it may be, is to put in capital because that is required. But I also take Chandresh's point that the government should use this opportunity to further what they did, with Indradhanush and stuff like that, is to really put a concrete plan to change the governance structure at banks, because you don't want to revisit this in the next cycle, right? I mean, so the PSU banks have been a classical cyclical sector, right? So you don't want that to come in. But at this point in time, I don't think you have a choice other than capitalizing them. There is also a view that there's a lot of non-core assets that the banks have, and the idea would be to aggressively sell those non-core assets, stakes in National Stock Exchange and CDSL and a lot of other stuff, which can unlock capital for the banks.
Okay, we're going to take a very quick break on that note. When we come back, we're going to quiz Neelkant Mishra about how he sees the markets performing come Monday morning.
Well, Neelkant, this question is coming your way. In your recent note, you've said that you believe that the sentiment-driven rebound in PSU banks and metals is an opportunity to cut positions. So according to you, this is more like a dead cat bounce and it is not durable. What makes you so bearish on these groups even after the recent meltdown in prices?
One, I think for PSU banks in particular, I think the problem is much bigger than just the problem of bad loans. I think the market is obsessed about bad loans. It is a big problem. We've been worried about it for the last 3 years. Finally, it seems to be coming into the public consciousness. We also think that the problem loans as identified by Indian regulators are actually smaller than what reality is. We think the problem loans are more like 12-13 lakh crores versus the 8 lakh crores that the policymakers are currently working with. And as we saw for some of the banks that have taken a big haircut, that post the haircut trading at 1.3 times book, their returns are still below 10%. At no point are those kind of valuations justified. So we are going to see a lot more action in terms of recapitalization, potential mergers, booking of more losses. So this is way too early to be jumping into these stocks. On the metal side, I think the concerns are much bigger. There is a lot of supply, there is a lot of currency declines that have happened in suppliers, so the cost curve keeps shifting downward. I think the reorientation of China, even if Chinese growth does stabilize, it will not be the kind of growth that was there in the last 4 or 5 years. And I think that's so. And plus, most of these companies have a lot of debt, which is yet to be resolved. So that's not a sector that I would want to be in, other than for a very short-term trading rally.
Hiren, let's talk about some key sectors which could gain because of budget, and one focus clearly would be on irrigation, infrastructure or rural. So which part of the market you would like to align yourself with the assumption that budget may be a trigger, budget may be an opportunity, and budget may only increase commitment towards that sector?
No, first of all, we've never changed tax because of the budget, because that's like trying to play an event, and that's always very risky. But having said that, I think that there is, one of the key areas that he will have to address this year is the rural distress, right? I mean, we've had 2 bad monsoons and he'll have to step up, and there's enough indications they've made that they will step up investments in agriculture. You cannot do everything through the budget. So, you'll have to do, you'll do whatever you can, and then it'll also depend on MSPs and so on and so forth. So I think, every year we say that, the budget will be favorable to infrastructure, companies or irrigation. But we've seen what's happened to infrastructure stocks 1 year down, from last year's budget, right? So you have to keep the limitation in mind that you can't directly apply in terms of what's happening to the budget, because there could be a lag in terms of, there are other factors that play out in terms of what can, finally what happens to the earnings trajectory. But on the whole, I think that, it would be supportive. I think what is important is that the government should not spread itself too thin. So let's say where they believe that they have somebody who's delivered or a sector that's delivered like roads, for example, and they have the capacity to absorb money and efficiently spend that money, then you go all out and back that rather than trying to open up too many fronts at the same time. So I think if they do roads, they do housing, they do irrigation, that should be good enough.
Just to take that point forward, Bala, roads, yeah, we've already seen the government be on the path already with the sizable orders that have been announced, etc. But do you think defense, irrigation, infrastructure per se, these are going to be themes which will be, at least he'll have to sound right when it comes to these sectors?
I think the key to watch is how the rural economy is being given importance. I think one of the challenge which I think is last 1 year which has emerged as against the expectations, which is the employment growth. And the last few years we had good monsoons. Before that we had good monsoons that could generate employment, so rural economy could do well. But last year was relatively a poor year from the point of view of agriculture sectors because of poor monsoon. Therefore, there is a very high level of need that exists today in boosting the rural economy. From the growth point of view, yes, infrastructure segment can drive it, but at the end of the day, you are able to actually address the large pool of populations in terms of taking the employment through the canal improvement around the irrigations. I think that's something will drive. And second is the quality of spending will also, I think, would be extremely important to note this time, that how the money is being spent in order to actually drive the
So are there any tactical positions or bets that one can take sectorally? I know you won't talk stocks.
So I think one of the assumptions could come, of course, it's ultimately the all market is driven by the bottom-up stock picking, but then
which all of it is,
which all of it is, and that's the way I think will stay even going forward. But I think one other thing which probably one has to watch out is how the consumption-led companies could get the benefit. So one, you have 7th pay commission, which is coming in. Some roadmap around that could actually set the ball rolling. And second is, if there is a lot of spending is going to be done around the rural economy pickup, maybe where a lot of companies are struggling at this point of time, urban growth is good, but rural growth is not that great. Therefore, the consumption-related sectors could potentially be one of the biggest beneficiary if there is a reasonably good indication that employment at the rural economy, I think, is going to go up.
Chandresh, so far we've discussed the economic part of the budget, but what about the political part? And the political part also needs, some attention. BJP has lost elections. Important state elections are due in 2017. So there has to be this political aspect which also would be overseen in this budget. Everybody is talking about, the rich-poor divide. Tax the rich more, don't tax the poor. Will this budget, send a strong message this time around to the political class as well?
So I think it's ultimately, obviously, I think the big, the population at large as such, obviously is really affected by general level of growth. I think we know that there is significant stress in the rural economy, so I am sure there will be some measures taken to alleviate some of that stress. Whether the quality of that spend or the allocations which are made is the quality is good or bad will be determined, whether it's a handout more like in a Narendra or it's investment led more like investment in irrigation, etc. I think there was one point I wanted to talk about where because of lack of investment, ultimately growth, what is the problem with growth? The problem with growth is basically complete lack of private investment demand.
No demand.
No demand, absolutely. So while government can do a little bit in terms of directly investing itself, so people have said basically pick up the slack which is there because there is no private sector demand. I think one of the things which they can do which can have a big ramification is housing. I think there is enough demand. There are a number of sectors which are under stress, realty obviously. There are associated sectors like steel, cement, employment opportunities. I think construction labor, one of the very, very large constituents of the overall employment force, so to say. So if they can, and also if you give some incentives, notably tax incentives on housing, it doesn't really affect your budget numbers or fisc numbers for this year, and it could be a long-term incentive for getting some kind of private investment back, and in a sector where anyway demand is certainly there. So I think that can have a big impact on growth in general, on employment, generally feel good. So I think if I would look at one big thing, I think it will be some heavy swaps towards housing so that it can really give widespread improvement in the overall
It will have a
growth rates.
multiplier effect for sure.
Absolutely.
So, Hiren, just to throw in one more aspect from housing is the real estate sector. Real estate stocks have been beaten by black and blue. Interest rates will come down. Rural demand will move up if we have a normal monsoon. The thrust towards smart cities is visible. So, can real estate be a dark horse? And if the housing finance companies, the housing sector gets some kind of a tax push, that's good news for the real estate sector.
It'll be good from the demand side. I think the problem with the real estate, for a large part of the real estate sector, has been their leverage on the balance sheet, right? So, how they tackle leverage on the balance sheet is independent to each company. But if there are SOPs given, then at least that can incrementally push demand, And I think, as he rightly said, I think the thing is that the demand is there at the lower end and the mid segment. The problem is really at the top end, right, where there was an over-investment and there was investment demand which was driving demand in the real estate sector. So I think the key is to give a push to real effective demand in that sector. Now, whether that translates into it could have multiple ramifications for housing finance companies. It could have ramifications for real estate companies. But I think, as I said, in the real estate companies, you have to figure out, like for example, one of the things that we talked about in the last budget, but which hasn't triggered, is the REITs.
Yeah.
Right. I mean, so if they do something seriously where the tax implications are simplified and things are clear, and REITs take off, that will essentially unlock a lot of capital that is already locked into the sector today, right, and help to reduce leverage in the sector. So I think that is very, very important, to get that thing right. But yeah, I mean, if they can get the REITs right, if they can give some tax exemptions for, housing, it could be a big driver. And it also is consistent with, this government's focus of having housing for all by 2022. It's a very clear objective that Mr. Modi has set for himself. So I think, you should see some moves in that direction.
Okay, we're going to take a very quick break on that note. When we come back, we'll tell you all about how to deal with the Monday volatility that the markets could put you in. And of course, get you a very special expert view just ahead of the budget from ex-finance minister, that's P. Chidambaram.
Staying with us, you're watching Budget 2016, The Street View. I'm going to get closing comments from our panel, and this is really going to be a short-term question.
Rapid fire.
Rapid fire. Budget day, how much up or down?
Very difficult to put the number, but my view is it'll have a positive turn.
I agree. I mean, expectations are really low.
You can't answer the same.
Percent.
Huh? Just because
Fund managers are supposed to be different.
All contrarian.
Let's say the probability is that, it should be higher.
With a lot of volatility, Bala?
I think we'll have the least volatility. The way I see is, as we discussed in the last half an hour or so, its expectation is low. Any number that's being printed, as long as we discussed, about 3.5% fiscal and reasonably good clarity around spending around the rural economy, I think market will turn it to positive. And again, the last few weeks, the kind of volatility that we have seen, and every time the market has come down, only on expectation the budget will be bad. So that's why I feel that it could probably the volatility could be relatively the least, and it could probably have a huge swing towards positive side.
Markets are nervous, the world is nervous, the setup
but
is
Bala
broken
is
down.
not, Chandresh is not.
Yeah. So I don't know who's nervous.
It's just you and
Let's
me,
forget the
Nikunj.
budget day. It should start moving up the next day onwards. It's okay. We'll give you a small concession.
Okay.
For the sake of
Thank you
contrary.
very much. I was looking for that answer, but the cat's going to be out of the bag only on Monday. Whatever we may discuss, we may decide. Ultimately, it's the finance minister, and the script of how markets will move that day will be a function of budget volatility. But a week from now, it will be the global market action.
I just hope Asian cues are fine. China is stable that morning. I think that's become more imperative right now. And you also believe that, right? That it's eventually the global cues, which are the Grexits and the Brexits and US Fed, which is going to dictate
This
our
year
markets.
is going to be, I think, largely dominated by the global news. I think all the risks which we have been seeing building up over the last couple of years suddenly have come to the fore in this calendar, and I don't think we are past that. I think this year we'll continue to see market focusing on one of the others with very high frequency, in a sense. Regularly things will keep coming up. So
there's one more observation which I just made, and I don't know how many of us would have noticed that this time around there's so much of volatility we have seen in the last 1.5 months. The G20 countries had made the least amount of noise. And since yesterday, they are again looking at paying attention to currency volatility globally, the way commodities actually hurting most of the global economy. And they have now been debating about what they need to do in terms of coming together. Is there any actually call that need to be taken towards the concerted effort? We do not know. But if some other that comes, then we could see the whole sentiment actually changing towards something. Look at what the actions could be taken by the G20 countries and global central bankers.
So, Asha, the bottom line is that budget is important, it is crucial. Markets are anxious, but a week from now, if we have to record a show with Chandresh Bala and with Hiren, we would be discussing China, we would be discussing, other factors, we will not be discussing budget.
Okay, I hope it turns out to be as big a non-event, much unlike what the rest of the market has been fearing. But enjoy your weekend, rest up. It promises to be an action-packed Monday, and we'll catch you with all the live coverage of the Union Budget 2016, 7 a.m. onwards, right here on ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.